Hey, what's going on, guys? Andrew here, and today we're going to be talking about NIO earnings. It just came out about 10 minutes ago, and as you can see right now, stock price has fallen a lot. In this video, I'm going to talk about earnings, going to talk about some news that came out recently, and the guidance for the future of the company. Now, this Seeking Alpha article says that NIO actually beat earnings per share estimates, but I've also seen a lot of sources that said they did not beat earnings per share estimates. So we're going to have to wait and see which one's actually the correct information, which will come over time, probably within the next few hours. But NIO also did barely miss revenue estimates by about $20 million, reporting a revenue of $1.02 billion in the fourth quarter. Now, NIO ended up delivering 17,353 vehicles in quarter 4 compared to 12,206 vehicles in quarter 3 of 2020. Now, this is almost a 50% increase in just one quarter, and I think that's really bullish news. As you can see from this right here, that the total revenues also increased by 46.7% compared to the third quarter of 2020. Now, I do understand that they did miss expectations, but these reports are still extremely good. Now, the one thing that I am super disappointed with when it comes to NIO earnings is the delivery numbers for February. As you can see from this paragraph right here, they delivered 5,578 vehicles in February, which is about 1,700 to 1,800 less than they did in January. Now, compared to year over year, these are still really good numbers, but of course, we still wanted to see an increase in deliveries. Now, I don't believe that February is a good month for NIO because of Chinese New Year, and of course, because February is usually shorter with it being 28 days. Now, the reason that I say historically February is most likely their worst month is, as you can see from this paragraph right here, when talking about January and February delivery numbers, they say a strong 352% and 689% year over year growth. So that year over year growth for February, even if it's numbers that we don't expect or something that doesn't really justify what we thought was going to be their delivery numbers, that is still an excellent year over year growth, and it's way stronger than January's. Now, before you click off this video or go sell your shares, let me tell you about the guidance and the CEO and CFO's comments. They said some pretty game-changing stuff, and there's something that we cannot ignore for the future of this company. Our favorite CEO, William Li, was talking about the NIO earnings, and he said, supported by competitive product offerings, outstanding services, and innovative business models, we have won increasing recognitions from our users and expect to deliver 20,000 to 20,500 vehicles in the first quarter of 2021. Now, this would be a huge increase from 17,000 vehicles in quarter 4. Now, NIO also achieved positive cash flow from operating activities from the fourth quarter. They also improved their margin really well with a 17.2% vehicle margin compared to negative 6% of quarter 4 of last year. Now, if NIO ends up delivering 20,000 vehicles in quarter 1 and continues to improve their vehicle margins, that's going to significantly increase their revenues. Now, the company also expects revenues to increase by about 11 to 14% within the next quarter, which would be about a 450% increase from the same quarter in 2020. And throughout all of 2021, I think they're going to continue to increase their sales by a significant amount, especially since we got confirmation from William Li in an interview that they're going to be moving into Europe in 2021. Europe gives them a whole new market to expand into and sell their NIO products like their battery swapping service and their cars, which is going to lead to more revenue, going to lead to more deliveries. This gives us investors high hopes for 2021, and it's definitely going to reflect in the stock price. Now, I can't lie to you guys, I am a little underwhelmed. I thought we were going to see a significant beat with how January did, but February seemed to just lay off the gas just a little bit. But usually when you see small beats or small misses on earnings, people look to guidance in order to decide if they're going to buy and sell their stock, and what you see is really good guidance from NIO. But surprisingly, the stock is still selling off a little bit. People just want to get out of this stock, and honestly, it doesn't really make much sense. NIO has already announced that they're going to be moving into Europe, and that is just such bullish news for the entire company in general, and it doesn't make sense why people want to be selling at these prices. Now, we got even more confirmation that they're going to be entering the European markets in 2021, as William Li was on an automotive media outlet, and in a web conference, he talked about international markets. He said that after entering Europe, NIO is going to start selling in other international markets in 2022, which could very well be the United States. Now, the expected spot that they're going to start in the European market is Norway. Norway has over 50% of their cars already electric vehicles, which is the densest market share in the world. We also found some evidence on LinkedIn of a bunch of job offerings talking about integrating into the European markets in Oslo, Norway. There's also been some pictures around Reddit where cars have been seen in California, and there's also some shipment information that talks about NIO cars being delivered to the United States in February. Now, I'm likely thinking that NIO is going to be creating a showroom in California, which is one step closer to them moving into the US markets. Now, NIO actually had to delay their 100 kilowatt battery flexible upgrade service by 2 months because they actually had so much demand they couldn't get enough supply. Now, the word delay makes it sound bearish, but this is actually super good because they're seeing such an uptick in demand that they actually can't even handle it right now. This is a service that only NIO provides right now, and no other electric vehicle company is doing something similar. This gives them an edge over other electric vehicle companies, and we know it's going to help out the revenue throughout the year because the demand is just so high. Now, this increase in demand is likely why they're putting so much money into these factory expansions, like the industrial park that they're building with the government and the expansion of their current factory with JAC Motors. It seems that right now they physically can't handle the demand that they have for their products, and that's not a bad thing. Now, I'll be honest, I know I'm biased, but just reading all this information and their earnings report and their guidance just gets me so excited as an investor because there's so much to look forward to with international markets, battery swapping stations, and of course, this upgrade service. This analyst from Investor Place even thinks that NIO stock is going to go to 100. I gotta be honest, I still believe the same thing. I mentioned on NIO Day that I think it's going to be a triple digit stock by the end of 2021, and even though the price has significantly declined since NIO Day, I still have that same conviction. The analyst talks about NIO, and he talks about the electric vehicle sector in general, the future of it, and he also believes that NIO is going to be the second largest electric vehicle company behind Tesla. Now, NIO is approaching a very key level on the chart. As you can see, it's rejected this 42.5 to 43 level a bunch of times. Now, we need that level to hold, or else we're going to see a move lower, possibly around this 37 to 38 support right here. The big resistance we have to get over is going to be this 65 level. As you can see, it's rejected 4 to 5 times, and I think we're going to need a big news event to happen in order to break over that level. Now, with that being said, I don't think that NIO is going to break below that big support at 42.5 because the news that came out today with the earnings report, it wasn't a big miss. There wasn't anything catastrophic about it. As long as we don't see a huge volume sell-off in the morning, we should be fine. And of course, like I tell you guys all the time, I'm adding on dips. Now, to be honest with you guys, normally I don't play options on my long-term investments, but a NIO lead call isn't looking too bad. With European expansion coming soon, the day that that gets announced, the stock is going to absolutely skyrocket with them moving into new markets and investors wanting to pour in. Now, if we do end up hitting my triple digit price target by the end of the year, a lead call close to being in the money will definitely pay. Now, of course, I'm not a financial advisor. This isn't financial advice. Options are extremely risky, and investing into companies that you don't know about is extremely risky as well. So make sure you do your research upon NIO. This is my highest conviction stock. This is my highest owned stock. I really like this stock, so of course I'm biased, but I think it is for good reason. Now, let me know your thoughts in the comments, what you think about the earnings report. Do you think it was good? Do you think it was bad? Or do you think it was meh? There wasn't anything crazy that I saw that was going to change my mind about my investment. And actually, I felt better once Mr. Lee talked about the guidance for the next quarter. But anyways, I wanted to get this video out as quick as possible. I try to get this knocked out for you guys, so you guys are updated as soon as possible. So I apologize for it being a little bit raw. But that's going to be it for this video. If you enjoy, make sure you subscribe, and I'll see you guys in the next one.